Hello everybody. My name's Shannon Scott and I'm here with Will Herring from All Western Mortgage. And we're just going to talk about, well, what's happening in these strange COVID times and here in Littleton in the Denver metro area. And it's just really a delight to sit here and talk. It'd be nice to be face to face, but this is the next best thing. It's really fun. So hi, Will, how are you today? And what's happening?
I'm good. I'm good. Thank you for having me on. Wanted to talk a little bit about what's going on with the market and how the COVID-19 is affecting mortgages in today's world. We can spend a couple minutes doing that.
Great.
One thing that I've noticed is that there's a lot of the investors that don't want to take on any risk these days. So the more risky the file is, the less chance we have of getting things done. But that doesn't mean that we can't do down payment assistance still. We can still do credit scores down to 620. We can still do 3% down, 5% down for conventional loans.
That's
The
great.
government loans are pricing a little bit worse than they used to, and that's one of the layers of risk, just the fact that it's a government loan. Some of the hoops that we're having to jump through is double checking to make sure that the folks are still working in their jobs. If they get laid off the day before closing, we're going to have to back up and punt, figure out a way to get the file done or delay the closing. So these days with 18% unemployment right now, they're all going to be concerned about who's working and can these folks really still afford this home. So that's one of the things we're dealing with.
That's pretty scary, and that's new. I've never heard of that. Once typically you got approved for it and the employment and everything, that calling the day before. Although the advice was always, don't change your job.
Right.
Don't buy anything.
Right.
Don't do anything that's going to impact the credit in the transaction.
That's right. We have one file that we got under contract this month on the 15th. And we're closing it tomorrow.
Wow.
So even though we're extra busy, if there is a need for a very quick close, a very short time period, we actually had our loan approval within 3 days, 3 business days. And our appraisal came back within 5. And then we got our clear to close 2 days later. So
great.
If there's an opportunity for a buyer that can move in quickly, or somebody's fallen out of contract, if you as the agent can get a deal for your client on that home, we can get them in quickly.
Oh, that's good to know.
Yes.
That's very good to know. So, well, how are you serving that's how you're serving the community. Of course, we're all staying, sheltering in place and everything. But one thing, what's another thing that people don't know that is a common misunderstanding about going in for a mortgage or planning to get a house or whatever?
Right. Okay. One of the common misunderstandings is the one that I run into the most is a lot of people think that you have to have 20% down or a large down payment. And along with that, people also think that they have to pay off some of their debt in order to buy a home. And those two things is kind of one thing. It's about the money, the amount of money that you think you need to buy a house.
Okay.
With down payment assistance, we can literally get people into a home with $0 out of pocket. If they have some debt that they want to pay off so that they can afford their house, or so their house payment is not as big of a hit to them, wait till after closing, keep all your money that you have available and go pay off your debt. That way you have a new house payment that didn't cost you anything to get into, and you still got to pay off that debt that helps you out with your monthly outlay of costs.
Oh, that's a good idea.
Right.
So
that file
it is backwards. It's not backwards, but
it's still strategic planning with your money. If you have the funds available for your purchase and then you don't need them, that's when for sure you get to pay off those debts.
Right.
That file that I was just talking about that we got under contract on the 15th, that one does have down payment assistance. My client brought $5,000 as an earnest deposit, and she's getting almost $4,000 back. So basically it cost her about $1,000 to buy the house. And that's only because we couldn't get the seller to pay all of her closing costs, but we got him to pay a bunch.
That's awesome. That's
Yes,
wonderful.
yes.
That is absolutely wonderful.
So there's another thing too to think about. Some folks will say, well, hey, I've got my lease is up in September. And if I break my lease, it costs me an extra 1,000 or 2,000. But the property that I found that I really love is available now.
Oh,
So it's possible that you could even use those down payment funds to break your lease rather than for your down payment. If that's what makes sense for you,
oh,
that's what you could use those funds for as well.
and sometimes, the landlord isn't always as stiff about those getting out of the lease. It depends on, if you've been a tough tenant, maybe they're
Right.
going to make you pay and then some. But I think it's all negotiable. It's always good to ask, or can we
Of
only bring
course.
half or whatever it is. It's always good to figure out those questions,
Of course.
because
One of the
people
good things that
answers.
I've heard clients do, sorry to interrupt you,
That's
sorry about
okay.
that.
Go ahead.
One of the things that I actually have heard a client do is they made their apartment available to their landlord to show, hey, if you want to show the property now instead of September when it's going to be harder to rent, I'll
Oh,
make it available. We'll keep the place nice and tidy. I'll talk about, the nice things about the property or the situation that we have here.
uh-huh.
If you can help your landlord out, that might also help you.
Oh, that's a good idea. That's a great idea. And rents are just going to continue to go up just like the price of a house.
That's right.
Rents are 1,800 to 2,000 for apartments. So,
Hmm.
if you can get into a house or a condo for $1,500 to $1,800 a month, it's a win-win situation. One of the things I like that you shared with me when we first met was the whole credit, checking your credit.
Yes.
Go to a bank, they check your credit. You go here, they check your credit. And so you don't have to do that. And that was a really good piece of information also that I did not know.
That's one thing that is sad about our industry. Most of my competitors, they want to get your social security number within the first 5 to 10 minutes on the phone with you.
Oh, right.
I would rather meet you in person or over a Zoom meeting.
Hmm.
When COVID-19 is over, I'll be back in the office, of course.
Hmm.
But I'd rather do some brainstorming with you, teach you all of your options. I don't need to pull credit.
Right.
If you know about what your credit score is, we'll just keep moving forward, showing you your options with what you think your score is. And
Right.
by the way, we do score repair for people for nothing. So if there's something that I can help you fix your score or get you up to the next level, I'll do it for zero. All you got to do is get me the proof that whatever is paid off is paid, or whatever is inaccurate, the letter or the proof that it's not your debt.
Oh, well, that's great. Well,
Hmm.
that's and you don't charge for that.
That's right.
Oh,
That's
you
right. I've
don't.
spent hours and hours with clients ahead of time so that they knew exactly what their options were before they decided to let someone pull their credit or go out and look at a home.
Oh, that's a good idea because, especially with which reporting agency had the breach of
Equifax.
Equifax. And,
Mhm.
because of that, people have just become so frightened,
They got
not
30
knowing what to
million,
do.
some odd people, 30 million
Oh, yeah.
breaches in that. So likely yours and mine.
Right. Just buy a watch mine.
Right.
Right. And so, there was another neat thing that you shared with me. Can you share your screen so we can
Mhm.
have an idea of what it is that you do to help people?
Yes. So let's see if I can do this real quick. Advanced portion of the screen, hit share. Here we go. All right. So this is the software that we use to get people loans. And I like to take my clients through a hand-holding process where I show them what their loan looks like. I show them what their house payment looks like. I show them how $10,000 up or down in their purchase price will affect their payment.
Okay.
So these are good things to know when you're out searching for a home, because if you see a house down here and it's 390, and the house over there is 400, you kind of need to know what's the difference in your payment for that.
Right.
So this software here is simple stuff. I do explain to the client what's involved in their house payment, the principal and interest. I call it principal and profit. Always the property insurance is part of the house payment. Always the property taxes is part of the house payment.
Right.
And this is an example of how mortgage insurance looks on a $400,000 purchase. Mortgage insurance is available if you don't have 20% down on a $400,000 purchase. You would need $80,000 down to avoid mortgage insurance. And to me, it's easier to come up with $122 a month than it is to come up with $80,000 down.
Right.
So mortgage insurance is actually a pretty nice option. Our parents were all taught to avoid mortgage insurance like the plague. not the COVID-19, but avoid mortgage insurance like the plague. Because back in mom and dad's day, mortgage insurance was really expensive. And nowadays it's come down in value, come down in cost. So it's not that big of a deal to not have your 20% down payment anymore.
Good to know too.
As an example, this house payment here on this fake house at $400,000 is $2,275 a month. And if I switch this to a $410,000 home, $2,275, I'm going to put it in the calculator. $410,000 home. This is with 3% down, by the way. If you're a first-time home buyer, we can do 3% down. So of course, a $410,000 house payment is a little bit more than a $400,000 house payment.
Right.
It's $2,324, and that comes up to $49 a month.
Right.
So $49 a month for $10,000 more in home might be worth the 49 bucks. Let's call it 50.
Right. Right.
Good. So this is an example of how I show the folks what their options are with their purchasing power. I also like to show how the value of real estate will change over time. If I show you this website, anything looking at Colorado here, Colorado's up by 0.88% in the last quarter. In the last year, we're up over 5%. In the last 5 years, we're up over 54%. So someone that bought a house for $200,000 5 years ago, if you've been renting for 5 years, let's do this math, times 1.56, the house is worth $312,000 now.
Oh, yeah.
Using that state average. And of course, Denver Metro carries the state. So somebody living out in Como, their house value probably didn't increase this much, but Denver's probably increased more. If you click on the state of Colorado, you can see that we've been collecting data since 1975. And one of the things I like to show my clients is we've had 6 recessions since 1975. We're always going to have one coming up. This COVID-19 may cause a little bit of a recession.
Right.
And I can't imagine for the life of me why someone would want to sell their house at a loss. So most of us homeowners will keep our homes.
Right.
Anytime the market gets soft, we'll keep our home because you got to live somewhere anyhow.
Right.
And we'll ride out that low period in the real estate value and wait for the values to come back up before we decide to sell or move on to our next home. So no one should sell their home unless they absolutely have to during the downturns of the market. But you can see here in Colorado, 5.8% increase in value is the average increase for the last 45 years. So every year, if we have an increase somewhere around 5%, you're going to really start building a lot of equity in your home.
Right.
Using our example of that $400,000 property, this one's at 410. Let's just use the 410.
Right.
If you only live in your home for 3 years, 410 times 1.05 times 1.05 times 1.05, that's only using 5% per year.
Right.
of appreciation. The house is possibly worth 452.
Right.
Okay. And this is some of the math that I like to do for the folks so that they can see how building equity in their home is important. Look at this. This is the amortization schedule. Over that 3-year span,
Hmm.
you're going to pay out the principal and the interest. Remember, I called it principal and profit.
Right.
And there's that pesky mortgage insurance. But like I said, it's easier to come up with 125 a month than it is to come up with $80,000. I'm
Yeah.
scrolling down to the 3-year mark. If this person who buys this home only lives in it for 3 years and they only owe 375, but the
Right.
house is worth 452,
Right.
of course they built some equity or wealth. It's
Right.
really wealth,
Right.
right? Because most people can't save this much money in a 3-year span, but you can sure earn it by owning your own home.
Hmm. That's very true. That's very, very true. I think it's fun playing with those numbers,
I
doing
do too.
projections. It's really fun and it's good information. Well, and then you can plan for a year out, or 6 months out. This is where we want to go. This is, where we want to live, and you can start. You don't have to wait till you're ready to buy, because that's
Mhm.
when people get caught up too, is if they don't know all the ins and outs,
Right,
and that there's a lot of planning in place, and it can actually be a lot less painful for sellers and buyers if they do a little investigation about their next step, because if you're selling your house, you're going to be going somewhere. So you're
that's right,
essentially a buyer as well. So
right,
what's my leverage in the asset that I have now? And how do I need to plan for that? And so I just really like these tools that you have, and you can sit with people and I think it gives them a lot of hope and excitement.
right.
I really like it. You know.
One thing that I can say is, since I don't need your personal information and I don't need your credit score and I don't need to pull credit and I don't need your social security number, I don't care when you want to buy a house. If I can give you the steps to buy the house and you don't buy a house for the next 5 years, that's okay.
Right.
The longest client I ever had was 5 years from the first meeting to when he actually bought the house. And we had 5 or 6 meetings in amongst those 5 years
Uh-huh.
so that he could re-ask new questions, check what's going on with the rates, with the market, with everything involved in buying his home.
Hmm.
And he was the kind of guy that didn't want to make a bad decision, so he waited long enough to where he was very comfortable with making a good decision.
Right.
So even if it takes 5 years, that's okay with us.
Well, that's good. So there's no pressure, because
That's
that
right.
happens in other places too. There can be some pressure on
That's right.
making a decision, to do it, and that's what I like also about how you work with people. So before we go, I just want to say thank you very much for taking the time to sit with me and share some great information during these challenging times. And I just really appreciate all the service that you bring to your clients and doing business with you. So thank you so much, Will.
Thank you.
Really
Thank you,
appreciate it.
Shannon. Thank you. Your heart is there to help your clients. I'm trying to do the same thing.
Yeah.
And I always figure that if I'm helping the folks, I'll get my bills paid. So
Yeah.
that's all I care about. Take care of my family, and you guys take care of your family, especially during this COVID-19,
Yes. Thank you so much.
of course.
Bye bye.
Thanks, Shannon.